We love when Scott Minerd comes out and is sort of anti-junk bonds. What did he say?
So there's this notion going on that if the Fed does begin aggressively cutting interest rates, we could see a rally in risk that includes high-yield bonds. Well, Scott Minerd coming out and saying that's probably ill-advised. If you look at history on average since 1986, through every single Fed easing cycle on average, we have seen high-yield credit spreads widen by 131 basis points. So while people believe that maybe now is a time to get into the riskiest of credit, he's saying probably not the best idea.
I think you disagree with Mr. Minerd.
Well, I think what's a little bit dangerous about doing these historical comparisons is that this cycle really feels very different. Like, a lot of people argue that what the Fed is doing is kind of crazy. Like, we had just a flip based on essentially no U.S. data. So is the U.S. recession really here, or is the Fed being like way more preemptive than in previous cycles? So if the Fed is way more preemptive, I think the relationship into high-yield bonds is also different, and I think the hit to high-yield bonds will probably come later. That would be my best guess.